Let's talk about 5 questions and the answers that I think can instantly improve your options trading. And before we do that, as always, please subscribe below. And I want you to help yourself to a free guide about how to trade 12 NASDAQ superstars for option traders. I think it's going to be pretty eye-opening. And the link is up on the right here and in the description below. Now, these 5 questions, they can really help those of you who think that the markets are rigged against you. Yeah, especially you. I know I felt that way before. And yeah, while it can seem like the markets are determined to take your money, there are definitely other issues that are holding a lot of traders back from seeing those profits in their accounts. And what's funny is how aggressive many traders are with their trading, but they are so cautious with their money in other areas of life. It's like refusing to spend $100 on a new pair of shoes, but risking 50% of your account on one trade. So how does the market get us so twisted around with how we manage our risk? And I think in many cases, the lack of profits can be boiled down to a few common mistakes. These 5 questions, I think, can provide an instant turnaround in your performance and could eventually lead to the profits that I think we're all looking for from our trading. So number 1, does this option position meet the rules of my system? And we're all hit with new trades every day, the ideas, whether from media, a newsletter service, or colleagues at the office that we work at. None of these are good sources for trade ideas. And I think it's crucial that you have a defined system in place that's going to guide your trades from start to finish. And it doesn't matter if you're using a set of indicators or you're looking for different chart patterns. It doesn't matter. You just have to know beforehand what you're looking for in every trade. And since I'm talking about chart patterns there, I have a free guide for you about trading certain price patterns in the market. And the download links are above and below, just like everything else will be. Anyway, if you take a look at this chart, here is an exact sequence that we look for and we teach our traders to look for when getting into a trade. And when this sequence plays out, traders know that it's going to produce a 70% win rate over time, with the winners being 2 times the size of the losing trades. So from the moment that position is put on, exactly how to manage that trade is also known. Now, targeting 100% returns on the winning trades while risking 50% of what is paid to put the position on. That's what we do. Now, that takes a lot of emotion out of your trading. You're not overreacting to every move back and forth in the markets. What you are doing is executing the trade plan, which you know is going to place the odds in your favor over time. So before you put another dime on the line, just make sure you're able to define your trading plan from start to finish. And I don't care what you're trading. It doesn't matter. It's the same thing. Because doing so will reduce the headaches and the stress from the daily grind of the markets. Number 2, which options expiration cycle best matches your outlook for the stock? Now, having the ability to trade both weekly and monthly options can lead to exciting returns. The weekly options can provide amazing returns for just being in a trade for a few days. But your success or your failure from trading options can be greatly influenced by selecting the right expiration cycle. So in our opinion, most retail traders should trade options with 20 to 60 days left to expiration. Trading the short-term weekly options exclusively can lead to pretty inconsistent results, especially if they don't match up with your outlook for the stock that you're trading. And we are big believers in trading the same stocks over time. And we look at the same 40 stocks every single day. There's no distraction by any other markets outside of these 40. And this allows you to get to know the markets that you're trading. For example, Apple has been a Netpicks favorite for years. And pretty much hundreds of trades have been taken during that time. And as a result, we know that the average holding time on an Apple trade is between 5 and 20 days. So this can be valuable because it can help you select the best expiration cycle for the next Apple trade. And if you plan on staying in the trade for a few weeks at a time, well, then it makes no sense to trade the weekly option. But on the other hand, if you plan on getting in and out of a trade in 1 to 3 days, well, then it makes no sense trading an option with 3 months left to expiration. So knowing what an average holding time is on a trade is going to make your trading so much easier. And I think you're going to see a lot more consistent growth in your account. So looking for between 20 to 60 days left to expiration on the options that you're trading will allow you to be patient on trades without the time decay hurting you too bad. It's going to eliminate the stress that can come from trading the weekly options as well. Question 3, which option strategy will best maximize your profit and keep the risk to a minimum? So that is, don't get locked into trading one type of option strategy. Some traders are only willing to buy individual calls and puts. Others only want to sell credit spreads. But in both cases, that thought process comes from a lack of understanding of how options actually trade. Trading long calls and puts, that can only lead to big returns and also feel like a safe way of trading since you can't lose more than what you pay for the option. What many retail traders don't realize is that this approach is by far the most aggressive approach that you can take. It's going to tie up the most capital, and it only gives you one way of making money. Trading vertical spreads can give you multiple ways of making money on a trade, and it still leaves you with a defined risk trade. You know what the maximum loss is right up front when you take a trade. And using our criteria for a vertical spread can actually reduce the cost of a trade by 50% or more when compared to buying an outright call or put option. Trading credit spreads will give you 5 ways of making money on every single trade. And most importantly, will put the time decay in your favor on a trade. So those can be a great way of producing a consistent source of income. And if used incorrectly, you can find yourself spinning your wheels with no profit to show for your hard work. So if you're going to be successful trading options, you need to have a mix of strategies as part of your toolbox. Market conditions, they change, and you need to be flexible with how you are trading them. And there are times when trading long calls and puts makes sense. In a volatile market, they can produce great results. And there are other cases where using vertical spreads will allow you to better control your risk and be able to make money in a wide range of different markets. So don't lock yourself into one type of strategy out of fear or greed. Because if you can expand your toolbox to include vertical spreads as well, you are going to see far better results longer term. Question 4, is there enough liquidity in the options? Now, there's no worse feeling than finding yourself stuck in an options trade without being able to get out at a good price. And this can happen when you're trading products that don't have good liquidity. So what makes an option liquid? Well, we want to see good volume and open interest in the options that we're trading. So a good rule of thumb is to look for open interest of 30 to 50 times the number of contracts that you're looking to trade. So if you're trading 10 contracts, you want to look for 300 to 500 contracts of open interest. The more volume and open interest that an option has, the tighter the bid-ask spread's going to be. That will allow you to get in and out of your trades faster and at better pricing. Just saving a few pennies on each trade can lead to a big cost savings at the end of the year. So ideally, you want to see good volume and open interest in the options you're trading, but open interest does trump the volume. You will find that 9 times out of 10, the monthly options will have better liquidity in the options, which will make them much easier to trade. And that is why we at Netpicks personally do a bulk of our trading with the monthly options, and that is what we teach people to do as well. Finally, number 5, do you have an exit plan? Well, this is kind of like the first question, but it's so important that it justifies being here twice. Getting out of trades early or staying in for too long can lead to leaving profits on the table or taking larger losses than necessary. If you don't have an exit plan in place from the get-go, you are going to find yourself trading off of emotion. You are going to overreact to every move, up or down, and will often lead you to getting out of trades at the wrong time. So knowing where you plan on getting out of a trade before you even enter the position is going to help limit the emotional aspects of your trading. It will give you a rule that you can stay disciplined to. If you structure the rule to put the odds in your favor long term, you will see much better consistency from your trading. Here's an example. anytime you buy a call or a put or a debit spread, you know you will limit losses to 50% of what is paid to put the position on. And when you combine this with the fact that we are targeting 100% returns on the winning trades, well, it takes a tremendous amount of pressure off of your winning percentage, because you don't need to win 80% of the time to make money. Learning how to take a loss, well, that is a big step in becoming a successful trader. And making sure that your winners are larger than the losers, well, that's also an important formula to have in place. And look, the answers to these questions, they're not going to guarantee success on every trade, but they will start to stack the deck in your favor. You'll be able to back up your trading decisions through numbers and statistics instead of emotion. And if you take these steps, I think you will start to outperform most traders out there that overlook these areas that we just talked about. Thanks for watching. I appreciate it. Hope you subscribed. And don't forget to download your Options Superstar Guide. The link is below.